Hi, Das.
Hi, Praveen.
Hello, viewers. Uh, Hope you are liking our videos that we have posted so far. If so, please feel free to share with your friends and family. And don't forget to hit like and subscribe button. In case if you have any question, also post all your question on our comment section. We will try to answer all your questions. As you all know, in our last three videos, we have covered quite a bit of content with regards to Bitcoin and Web3 and how this blockchain technology overall works. And we thought today, before we move ahead, why not have a quick question answer round where very basics of what we have already covered, and some of you may have certain question in your mind on how, why, it is important, this blockchain technology and Web3 in our current life. So we thought of covering certain question around that. So without further ado, we'll start with that. So yeah, let's move ahead with the first question that we have. Why why should one be interested in Web3? So that's, we'll take this as the first question to start with.
Yeah, thank you, Praveen. Thank you for the lovely introduction, and nice to have you again. Missed you last week. So yeah, why should one be interested in Web3? Obviously, the answer is it's an opportunity for you to make money, both directly as well as indirectly. If you look at in the last 2 decades, if you look at the stock markets, the technology companies called FANG, Facebook, Apple, Amazon, and Netflix, they've been the most prominent companies. They have become a giant companies in the last 2 decades. These are tech companies, and Web3 is all about tech, right? And blockchain is technology, and here we are that it provides a lot of opportunities for investors to invest in tech startups. And if you look at traditional finance, when it comes to startups and being qualified to invest in a startup, you should be a high net worth individual, or only the venture capital firm can invest in a tech startup. And the issue is that, not an issue actually, in traditional finance, when somebody invests in a startup, it is basically locked in for quite a few years, maybe 4 to 5 years, where your stake is stuck and you're not able to liquidate that share of the startup unless the startup goes public and it gets listed in stock exchange, and then they are able to offload the initial capital that they have put in, basically the share that they are able to liquidate that share in the public markets. But when it comes to Web3 tech startups, it is quite the opposite. Here you get opportunity to invest in tech startups and and also be able to liquidate your share in terms of, right, in terms of tokens, right? And you can get tokens of a particular Web3 tech startup, and you can have it for few days or few months or few hours also. And if you decide that, or if you think that you made a bad decision, and if the protocol is not doing well, then you always have the ability to liquidate that share of yours immediately. So you have access to liquidity all the time. And right, if you look at the traditional banking industry is close to $8 trillion in market cap. And DeFi alone, decentralized finance protocols, can disrupt the whole banking industry. So that is the potential of DeFi, and you have the opportunity of investing in some of those tech startups which can actually make some good returns, right? I just just want to share with you some of the revenue numbers that these DeFi protocols are making. um, So these are the numbers that the DeFi protocols are currently making, right? The leading DeFi protocol, which is basically called Uniswap. Uniswap makes a revenue of $1.39 billion, and just in the trading fees. So if one wants to invest in Uniswap, they have the Uni token. You can buy Uni token, and you should also be able
So
to. Go ahead, Praveen.
token is nothing but if we have to compare in our traditional way, those are the shares equivalent to share of any company, isn't
Yeah,
that?
correct. It is like a share of a company, and the tokens would allow you to. It's just that it gives you more benefits compared to a share. So when you buy a share of a company, you're holding the share of the company, and then when the value of the share price increases, you are eventually selling it, maybe in shorter duration or a long-term duration. But apart from that, there is nothing much that you can do with shares. Yeah, of course you can. You can use it as a collateral and borrow against it. You can do the same with Uni tokens, Uniswap tokens. But at the same time, there are other utilities that you can get with Uniswap tokens in terms of being able to vote on the strategies
Mhm.
for Uniswap protocol. You will have the governance rights when you have Uniswap protocol, Uniswap tokens. You are able to decide the next course that the Uniswap protocol can take. What should be the revenue share that could be distributed among uh, Uniswap token holders? Whether it be 10%, should it be increased to 15%, so on and so forth. Um, so basically, these DeFi protocols, I did mention that DeFi protocols have this potential to disrupt the traditional banking industry, which is $8 trillion in worth. And if you look at the list of these protocols, these are protocols wherein you can swap assets. I know now it might sound Greek and Latin to you, but when we cover the next episodes, we will dive a little deeper into these protocols and understand how these protocols work. But basically, these are like your traditional banks, right? And if you look at Aave and Compound, you can,
Mhm.
if you own a Ethereum or a Bitcoin, you can actually go to this protocol and lend those to these protocols and earn interest on it, right? And similar to bank, bank take our deposits and then lend that deposit at a higher rate for a personal loan, or for a student loan, or for a housing loan, right? And the difference between that is the margin for the bank. That is the amount that the bank makes. It is a similar concept here, like Aave and Compound have the same concept, where they take assets from users and they lend it out at a higher rate. And the additional benefit of holding this Aave and Compound token is that you will also get some part of revenue share of
Mhm.
the protocol. So yeah, so in a nutshell, I know it is a long-winded answer, but being in Web3
Well,
gives you the
let me
opportunity. Yeah, go ahead.
yeah, let me give it a try. So what there are two aspects. I think one what you covered with regards to the from a business perspective, how the growth of this particular technology is gonna be. If I have to consider from other aspects, so me as a user of Web 2 right now in the current world, and me as let's say somebody business unit in Web 2 technology right now. So from both the aspects, Web 3 is something which is going to be uh, help, let's say, changing our current way of doing things. One, as a user, how currently I'm dealing with technology uh, through the decentralized way. It is going to make our life easier, as we showed in our previous episode also, where one transfer from from one country to another, which was taking through a lot of banks or let's say through different entities that transfers the foreign exchange and all, compared to this blockchain technology where we can do directly. So that's how as a user experience, and then how we can be part of this business and probably earn invest in this business and earn more money, which is
Yeah,
in the growing
yeah,
phase.
absolutely. I think you summarized it well. Um, I think, and the other part is we will cover later, is that one is the active way of earning. When I say active, you can actually buy this
Mhm,
Uniswap tokens, and the price
mhm,
might fluctuate up and down depending on usual demand forces, and forces of demand and supply. The second way is also you can benefit from the passive income, that is the revenue share of the protocol, right? So you're benefiting in
mhm,
two ways, actively and passively, which is not necessarily true in share, but one can argue that you get dividends as the
mhm.
when you hold a
Yeah.
share, right? Which is similar here as well. The only thing is you may be able to get higher value or a higher amount of the revenue share. Again, it depends on the protocol and the revenue that it is making, and what are the rules that these protocols have set in terms of revenue share. So it can depend from protocol to protocol. And I think last but not the least is that yes, you can make money, at the same time you can lose money as well. So let me put that as well. I think for me, why one should be interested in Web3 is to experience this world, right? To
Mhm,
experience the
mhm,
world of Web3. um, you should know what a self-custodying your money means. You should get a feeling of how you can have money with you rather than bank helping you to uh, save that money or store that money, right? So, and the experience of connecting your wallet to a DeFi protocol and how this entire thing
mhm,
happens. Because for me, each time I transact with my wallet on a blockchain, I get a feeling of magic. So I think you should experience it, not with a lot of money, but just to get a feel of how it is to be involved in blockchain ecosystem, right? So yeah, that's the last
mhm.
point why one should be interested in Web3.
Great, great. Okay, moving on to the second question. As part of this blockchain technology and all, as we just now covered some of the protocols, we also discussed the traditional way the organization is, and now on blockchain we call those decentralized organization. The formal name is decentralized autonomous organization. So let's talk about those. What are those and why those are necessary in our current world? So
Yeah,
over to you, Das.
yeah. I think it just happened to be that way, DAO, right? Because
Mhm,
think about, I mean, from blockchain is making world flat, and you are giving
mhm,
the opportunity for people across the globe to come together, start an organization, run an organization, share the revenue. I think this gives a breakthrough for how organizations could be run in the future. And if we spoke about the DeFi protocols in the previous slide, Uniswap being the
mhm,
leader, earning close to $2 billion in revenue on just through trading fees. The
mhm,
uh, the fact that people across the globe can be part of that protocol and decide how to run the protocol and also earn revenue share makes world really flat. And the
You
yeah,
so just if I may add, you get an entrepreneur experience being part of this, where you being involved in what decisions are making are being made, and you can contribute to that.
absolutely. I mean, think about it. It's like you can actually speak to people, to the developers, to people who are responsible, and you have ideas that you have in your mind that you think that will bring additional eyeballs to your protocol. You can actually have a conversation with those people, and depending on your suggestion whether it will be considered or not, but you still have this provision of uh, suggesting your idea, feeling part of of a startup, even though you have not started it. Just by
Mhm.
buying those tokens and being part of the governance structure, and you want to get actively involved in the governance of the protocol. And because
Mhm.
if I own Uniswap tokens, I also feel sense of ownership of the protocol. So I will go and talk to my friends about Uniswap protocol, because I have a vested interest in that. I also get some percentage share of the revenue. Um,
Mhm.
so the community itself acts as a marketing team for the protocol, and so more number of people
Mhm.
owning uh, the tokens of that particular protocol, they act as marketing agents. And the the fact that you are able to be part of the decision making process, being able to speak to developers, um, it's a great thing to be in. And the uh, I mean, we don't have regulatory clarity with this, and we will talk about that in the next
Mhm.
slide. But yeah, I mean, there are no countries in the world. I mean, there are very few countries in the world who recognizes DAO as a what a formal entity. Like, for example, when you have a centralized organization, you have a board, you can actually go to you have a process to register your company. But with DAO, there is no, but no government is very clear with how one can go ahead and register the DAO, right? Yeah.
Yep. Any examples? I know we covered the D5 examples, and D5 are nothing but DAO, because
Yeah.
those act as a financial institute, decentralized financial institutes.
Hmm.
But any other technology organizations, if you can name it, uh, one I can think of is Helium, is one example, and like that we may have means any other company which
Yeah, great. I mean, great example, Praveen. I think one is Helium is basically they look at how you can how you can decentralize network, right? Internet. So you can
Mhm.
buy a Helium
Yeah.
device. You can buy a Helium device and plug it into your home network, and then this Helium device will actually provide network coverage for basically. Um, devices that rely on Internet of Things. So when I say that, think of um what somebody has a pet dog, and that pet dog has a IoT device wrapped up around its neck.
Correct.
So it is to basically to find out if at all the pet goes away or gets missed, right? Then the IoT device around its
Mhm.
neck can transmit that information to the owner about its location. So the pet doesn't know how to use internet, right? So automatically this device will send that message over to the owner about the location of the pet. So that is
Mhm.
one use case. Currently, Helium is also looking at decentralizing the Spectrum network, the
Mhm.
mobile data network. Current Now we use the towers. The towers actually provide the network coverage for telecom industry. So Helium is looking at how that could be decentralized, and how it could be um, given to different people in around the globe, who can then transmit that spectrum, and in turn earn money from that, right? So that is currently in design, and I think you will see that in the next year or two. However, the actual cost of buying the Helium device is a little expensive. So there is a trade-off there. So that's about Helium. There is another company, decentralized real estate agency, that I came across. However, I need to do more research on that. It's called Realty, REEAL with a T, Realty. At a high level, what they do is, say, for example, uh, there is a mall in your town, and that is a very busy mall with high rents, etc. And people generally would like to have, like to have some property there. Maybe you could have a shop which you can rent it out and earn passive income through it. So what Realty does is, they identify such locations and such buildings, and then they tokenize that building, meaning they divide uh, the actual ownership of the property into several fractions, in terms of tokens, right? So there you can imagine the Phoenix ownership has one big token, right? And then the token being divided into millions of tokens, where each one of them can buy some tokens and actually have some fractional ownership of that mall, which means that you will get fractional rental income of that mall. um, the beauty is that if you can trade those tokens in decentralized exchanges, so when you have those tokens, the tokens from the real estate property, you can trade it. You can actually use that as a collateral to take loan from a decentralized protocol. So some of these DAO structures are actually being implemented and experimented as we speak. We will get that to you as we know more about it. We will start sharing through our channel.
Yep. Okay, let's move on to the next question. Yeah, so we spoke about both the advantage or why one should be interested in Web3, and also what DAO is and the benefits and all. But as we all keep highlighting in all our videos, that what are the risks associated with Web3 as well. So let's, what are the, if you ask, if you can cover some of the biggest risks that we see in Web3 technology in today's world, and which our viewers and all, when during their, if they are taking any decision and all, they need to be careful about it.
Yeah, absolutely. I mean, this is the biggest thing. I mean, though I spoke about how lucrative it could be investing in Web3 space, it comes with a lot of risks. The first risk that I can foresee is regulation, right? Regulatory risks, and the fact that you can connect your wallet. And so let's just go through what actually happens, right? You have your money in your bank account, and you convert that money into digital assets. So when I say that, you have your money in the bank account, you transfer that money to a crypto exchange, and then you buy a token, you buy a Bitcoin, you buy a Ethereum, etc. So basically, your money is getting converted to your money is getting converted to tokens, and and this money is not coming back to the economy of the country that you're residing in, right? And then you will be selling that off, etc. So um, so that is one big risk. So the governments around the world are concerned about how that money is not actually being used in the local economy, and how it is actually getting converted into a token and probably may not come back into their economy and can be used for money laundering, etc. Like, for example, Bitcoin, which we covered. If you are transferring money without any uh, intermediary, government can lose track of the money being transferred from one wallet to another wallet. So that's a big regulatory risk in the Web3 space. You don't know how regulations are going to come into picture. So you may invest, and then probably you may not be able to take it off at all, because government may shut down both on and off ramps, right? So you have um, on and off ramp, meaning you can actually convert your money into crypto, and then once you sell your crypto and then you want to take it back into your money bank account, you may not be able to, because then government may say none of the banks
Yeah,
can
right.
work with crypto exchanges, and then you won't be able to
Mhm.
convert that crypto into actual fiat currency. So regulatory risk is a big risk. The second big risk is that Web3 is all about self-custodying your money or having money in your wallet. And if the money is in your wallet on the internet, there are all possible chances that your computer can get hacked, or there is a malware in your computer that steals your money, right? So you will completely lose your funds if it is there in your wallet. Last but not the least, tech startups, right? We spoke about Web3 tech startups. Tech startups actually, uh, generally startups, 9 out of 10 startups fail. Okay, so it is true with Web3 as well. So even though you have this opportunity to invest in tech startups, majority of them fail. Failing is fine in my view, at least, because there is a realistic, you are accepting that risk when you invest in a startup, that you are accepting that risk, that there are chances that the startup can fail. I think the worst thing is that people pretending to be a startup and then taking away your money, right, and then going off.
Yeah.
That is the biggest risk. That you feel cheated. There is a lot of fraud as well in this space. So one has to be really careful while investing in this space, because it is relatively easy to come up with tokens like Das token, Praveen token, and then they can say that
Mhm.
they're running a DeFi protocol. Please invest in my tokens, and once you get the money, you are off, right? So so I think these are the three big risks. So I mean, one has to really keep an eye on all these three big risk areas while considering Web3. Um, yeah. Anything else that you can think of, Praveen, from a risk perspective, or I think pretty much we covered everything.
So I think yeah, I think you covered pretty much everything. And also, as you mentioned, some of these things are very lucrative. The kind of uh, returns and all, where you go inside and view how much of return you can expect, and especially uh, the one when we see how fluctuate, how much the amount, basically the returns and all what we see, it was so high and then suddenly it goes low. So people, when before investing or before taking any decision, they need to be very careful on those aspects. Not decide on just looking at returns percentage of being 100, 200 and all. First, before doing any investment, make sure you do a thorough check about this, the DAO, or any decentralized organization in which you are planning to invest.
Yeah.
So, yeah, with that, thank you, Das, for sharing
Yeah.
all the insight. And
Just one more point to add, Praveen, before we wrap it up.
sure.
I think the from a regulatory risk perspective, there is nothing that we can do, right? It is completely out of control. There's nothing
Yeah.
that we can do. The second risk that I spoke about, on your funds being stolen from your crypto wallet, so that is something that
Mhm.
we can manage. That is under our control, and we will come up with an episode on wallet management. How do you set up a wallet? What are the safe things that you can do? How to manage it? What is a hot wallet? What is a cold wallet? What is a hardware wallet? Right. So we will talk about that in the next episode or in the coming episodes on wallet management. So that's something that is under. And then third one, also we will do our best to share DAOs, especially where we are involved and we know the team, etc. But there is, I mean, at least there is some amount of check that we have done, and we can be relatively confident that it is a genuine project. It's making money and is a good potential. So 2 and 3, point number 2, how to manage your funds in the wallet, and point number 3 on um, how do you identify a genuine project versus genuine product. So we will do our due diligence and share it with you from that. So that's the aim of this channel, to share all the good projects, etc. Yeah. So
Thank you,
that's
Das.
it. Yeah.
Yeah, thank you. thank you guys for listening. And if you like it, don't forget to hit like and subscribe button. Also share with your friends and family. Thank you. We'll see you guys soon.
Thank you, Praveen. Thank you, viewers. Appreciate it. Bye.
Bye bye.